Commission has tightened rules on investment firms and fund managers in a bid to align with best practices worldwide and to better protect shareholders. Under the new rules, an investment company that is part of an existing group of companies under the same fund manager must comply with the minimum subscribed and paid up capital, which is at least 1 million pesos. The additional capital requirement for licensing of an investment company advisor is now capped at 1 billion pesos. The investment company advisor should also have unimpaired paid-up capital of at least 50 million pesos. The new rules also zeroed in on the creation of an independent oversight entity, an impartial committee that should monitor the transactions and functions of fund managers. The new rules now allow investment companies to invest less than 10% of its assets in liquid or semi-liquid assets, provided that it shall submit a contingency plan. The old rules had mandates investment firms to invest at least 10% of their assets in liquid assets. The new rules are provided for in SEC Memorandum Circular number 33, which was published in newspapers on December 5. These are set to take effect 15 days after publication. RCBC Chief Economist Mike Ricafort said these rules, which have amended the IRR of the Investment Company Act, are meant to give greater protection to the investment space, especially in terms of promoting greater controls and transparency, among others. Now, here are the stories from the corporate front. Dito Telecom Unity is closing in on its 1,900 cell tower commitment for its first year of operations. The telco said this is to cover 37% of the population and ensure a minimum speed of 27 Mbps. Aside from the cell towers, the company has also laid out 11 kilometers of cable. For its second year, Dito Telecom committed to reaching around 50% coverage, then 70% and 84% in its last year. The company is also targeting to go beyond this commitment to reach 90% coverage. The company is set to undergo a technical audit on January 7 next year. This was originally scheduled last July, but had to be delayed due to the pandemic. Cebu Pacific is seeing losses of almost 25 billion pesos to cap this pandemic year. That's according to its top official. Cebu Pacific President and CEO Lance Gokongwei said in a virtual briefing Monday that the airline sector is under severe stress. The Philippine Star reports that Cebu Pacific has already incurred a net loss of nearly 15 billion pesos as of end September, as revenues plunged 70% amid the pandemic. The budget carrier's losses this year will be a reversal of the 9 billion peso net income the airline posted in 2019. With the mounting losses, the airline's publicly listed operator Cebu Air had announced plans to raise up to $500 million in fresh capital through the issuance of convertible preferred shares and private placement of convertible bonds. Now, the Metro Pacific Tollways and the San Miguel Group will conduct testing for interoperability of the RFID toll payment systems as part of plans to eventually allow the use of a single RFID sticker in all expressways. According to a report by the Philippine Star, the test will determine the read rate percentage in comparing the two RFID infrastructure. This will be conducted for 14 consecutive days, involving 45 vehicles of different classifications. After the test, the toll operators would need to submit their test transaction reports, dashcam video recordings to the steering committee for validation and assessment. The move to cashless payments in tollways will be done in 3 phases. The first one already underway with 2 RFIDs under the Easy Trip and the Auto Sweep. Now, the second phase involves a single RFID sticker with 2 separate RFID wallets. Phase 3 will involve a single RFID sticker and a single wallet for all toll payments and expressway passage. But while such move to allow the seamless use of RFIDs in all expressways is underway, concerns over the heavy traffic brought by RFID errors have prompted the local government of Valenzuela to act suspending the business permit of NLEX Corporation. Camille Samonte has a report.
Mayor Rex Gatchalian has suspended the business permit of NLEX Corporation over issues on the implementation of cashless transactions. Gatchalian said the defective RFID sensors along NLEX tollways are causing heavy traffic over the city's main thoroughfares.
Mga sensor na hindi binabasa ang sticker, yung mga kotse atras abante, mga nawawalang load, lumalabas na lahat.
The NLEX management appealed to be given 15 days to respond to the concerns raised by the local executive. But Gatchalian rejected the plea and instead gave the company until today to provide an action plan. He added that motorists must still be able to use the expressway despite the suspension of its business permit.
They should stop collecting toll in the land area of Valenzuela, and that they should also lift the barriers and allow people to move freely.
NLEX Corporation admitted the technical glitches in their system and vowed to improve the situation in the coming days.
Gusto rin naman namin humingi ng konting pag-unawa sa mga taga Valenzuela. Alam po namin na medyo mag-ilang araw na po na medyo nagkakasikipan po tayo dyan at gumagawa ho tayo ng paraan.
The management is also planning to find another place for the RFID installations to avoid additional traffic jam.
Meron naman tayong tuloy-tuloy na programa, number 1, para ayusin po yung mga sensor. Araw-araw po, pinapasyalan po yan. Number 2, yung po mga sticker ng mga sasakyan. Kapag po napapansin natin na medyo from time to time hindi po nababasa, meron po tayong mga tauhan doon sa toll gate itself na nakikita nila, nagkakaproblema, inire-report agad yon.
The company is set to send the action plan to Gatchalian's office before the said deadline. The managements of TPLEX and NLEX have recently signed a memorandum of agreement to conduct testing of their systems. Under the MOA, an auto-sweep RFID sticker will be activated using an EasyTrip account and vice versa. The test will involve 45 vehicles, which are equally composed of the different classifications. The Toll Regulatory Board said it aims to implement a policy of toll interoperability for the seamless travel of motorists.
And we'll have more news when Business World Live returns. Stay with us. Good morning. You're still watching Business World Live. I'm Delos Santos. Research by the Oxford Economics has shown that long-term economic scarring in the Philippines because of the coronavirus pandemic can be expected to be among the worst in the world. Citing the UK-based research firm, the Philippine Star reports that overall long-term economic vulnerability would be worse in emerging markets such as the Philippines. This is due to factors including labor market rigidities, economic structure, financial imbalances, and limits to fiscal support. Aside from the Philippines, Peru, Colombia, and Spain are other countries that appear to be most vulnerable to economic scarring in the long term based on a scorecard for 162 economies. In contrast, Oxford Economics research shows that Australia, Japan, Norway, Germany, and Switzerland appear to be the countries that could limit long-term scarring. Now, the Philippines' delegation to a trade show in China last month generated $462 million in export sales commitments and on-site bookings for food products. That is almost 3 times the country's overall target. 40 businesses represented the Philippines in this year's China International Import Expo in Shanghai, showcasing tropical fruit, processed fruit and vegetables, healthy snacks, and seafood and marine products. Last year, the Philippine delegation generated $300 million in on-site and post-event sales. Commitments amounting to $455 million were signed, mostly by China-based firms looking to buy fruit from the Philippines. The Trade Department said the Philippine company that bagged the largest orders is ENG Sang Food Products, with an intent of procurement worth $245 million. And the Philippines joins a Singapore-based global network of technology startups in a bid to boost small businesses in the country. Manila is a fourth member city of GIA, or the Global Innovation Alliance in Southeast Asia, joining Bangkok, Thailand, Ho Chi Minh City in Vietnam, and Jakarta, Indonesia. GIA said the network aims to help startups and small and medium-sized enterprises to connect with overseas businesses and technology hubs. In a tech conference on Monday, Singapore's Minister for Trade and Industry, Alvin Tan, said the alliance will open more opportunities for tech startups and SMEs from Singapore and the Philippines to collaborate. At the same conference, a BSP official noted that a wider adoption of financial technology can spur growth among SMEs in the Philippines. The GIA has a total of 14 member cities, which include 3 cities in China: San Francisco in the United States, London, UK, and Tokyo, Japan. Now, a cement manufacturer has big ambitions for next year. Co-process no less than 10 million plastic sachets per day by next year. But what exactly is co-processing? To tell us more about that, we have Nabil Francis, President and CEO of Republic Cement. Good morning, Nabil. Great to have you here with us on the show.
Good morning, Jess. Thank you for inviting us. Real pleasure.
All right, so taking off from that introduction here, I mean, co-processing as much as no less than 10 million plastic sachets on a daily basis here. That's quite huge here. But first, explain to us, what exactly is co-processing? I mean, you've been doing this, I believe, for close to 2 decades now. But what is it really, and how does it help neutralize plastic waste?
Well, it comes to the manufacturing process of the cement, and to manufacture cement, we need to melt literally stones, limestone to be more specific, at ultra high temperatures, close to 1,500 Celsius grad. And the traditional process to manufacture cement is to utilize coal as a fuel to get to those temperatures. Now, for co-processing, the idea is to adapt our plants in order to use different types of fuel. Those are called in our vocabulary alternative fuels, in order to substitute part of the coal. And when you were mentioning the sachet, the plastic bags, those products are somehow containing energy. 1 kilogram of plastic, depending on the moisture, depending on the quality of the plastic, would represent more than 4,000 kilocal as energy. And co-processing is basically utilizing this in order to substitute coal utilization.
So how do you exactly go about that? I mean, is this in a way pretty much like incineration? But if it is, then there are concerns about how exactly are you going to control toxic fumes?
Well, that's a good point, Jess. And people are often thinking that co-processing is very similar to incineration. This is totally different. First, because of the essence of the process. At cement, we go up to 1,500 Celsius grad, where everything is literally destroyed. Even stone are melted. Incineration's temperatures are much lower, 700, 800 Celsius grad, depending on the processes. And sometimes the problem with incineration is that you have remaining ashes, up to 30% of the total waste. In our process, there is no ash, because everything is somehow captured in the matrix of the clinker. And the good thing about co-processing is that since we are utilizing limestone, that is a well-known scrubber, it's a natural scrubber for flue gas. All emissions are contained, and there is no increase of the harmful emissions.
All right. Now, like what we mentioned earlier, you've been in doing co-processing here for close to 2 decades. But why share the technology now? What is it with the pandemic, which has in a way highlighted that push to actually share the co-processing technology?
Well, we have benchmarked, the best practices around the world, and we have decided at Republic Cement to invest into co-processing in order to adapt our process in each of our plants. No, and this is, you're right. This is not a new technology. Mature economies are really have been using co-processing for long. Now, in the past, in the Philippines, this was mainly utilized in order to burn biomass. But now, I think we really need to walk the talk when it comes to environment. And you were mentioning the pandemic. No? We are reading a lot of articles mentioning that since our economy is in dire straits, all the environmental projects will be placed in the back burner because first we need to focus on the economy. At Republic Cement, we believe that this is not true. And we believe that we can do both in parallel and at the same time, because there is no successful recovery of the economy without taking care of our environment. So, we have the vision at Republic Cement to build a stronger republic by providing the people, cement with strength that is passes the test of time, no, but also a greener republic. And that's our way somehow to give back. I think it even goes beyond the scope of Republic Cement. It's at industry level. And I would say this is more driven by a purpose than the rest.
If you say that this is not exactly a new technology, what do you think has been the holdup? Why is there a slow adoption in the country when it comes to co-processing?
Well, there is the sachet, the so-called sachet, are very specific to the Philippines. As a matter of fact, and unfortunately, we are now the third largest plastic polluter in the world. And those sachets, the problem of those sachets is they are not recyclable. It's a residual waste that either goes to the landfill or even worse to the ocean. So now, since we have the possibility to tackle this segment, that's really where we wanted to make the difference. But the real problem, Jess, is how to collect those sachets, how to sort them properly, how to hold them to the plant, to shred them and to adapt them to be ready to be utilized in our process. And for this, it's all about partnering. It's not only Republic Cement. Without our partners, this would not be possible. And we are partnering with LGUs and FMCG companies. And I would like also to take the chance to thank those partners, because without them, we would not do it. This is a new venture. We need to increase the awareness of the people. We need to change the mind of the people, telling them that now we can co-process plastic. And for the people that are listening to us, please, if you have any question, if you want to participate, please send us an email, send us questions. Our email is ecoloop@republiccement.com. Do not hesitate. It's no time to drop the guard, and we all need to work in order to improve our environment. Just maybe one point, if you allow me, is that talking about those partners, we have seen also that, have you heard about plastic neutrality? And I think this concept is really evolving in the Philippines. And that are the FMCG companies that are really walking the talk. Because what they want to do is to make sure that at least the plastic that they produce is either recycled or co-processed. And we really appreciate this at Republic Cement.
Question now is, what's in it for Republic Cement? I mean, you did mention, of course, you are expecting this to at least replace raw materials in cement production, but is it going to be of the same quality? And at the same time, how do you expect this to lessen the cost? By how much?
Well, actually, this is not affecting quality at all. It's not injecting waste into cement. So quality is of course unchanged and remains our strength at Republic Cement. Now, what's in it for Republic Cement? Early to say. I have to say we have massively invested in order to adapt the process in our plant. We have invested in order to develop the collection process, And we have taken this ambitious target to co-process next year on a calendar day basis, not less than 10 million equivalent sachet of plastic bags. Now, early to say, but what we would like is this to be only the tip of the iceberg. And we want this to act as a magnet for the rest of the industry. We want the rest of the industry to follow, and they are following, because together we can do more. It's also our way to give back, because in cement manufacturing, we are a local business. And today we are actively supporting the Buy Pinoy campaign from the DTI, because, as we said, our economy is in dire straits. And the best way to recover is to buy a local product, locally manufactured product. So we strongly encourage also the public to buy locally manufactured cement. And it's also a way to show what we are doing for the local environment.
Given that, Nabil, I would like to know at this stage, what's your year-end outlook for Republic Cement and for the cement industry in general here, especially considering that infrastructure investments were put on hold due to the pandemic, in a way also affecting the industry? How much has that crippled demand this year?
Well, actually, our industry has been heavily affected, especially with the lockdown. No? We had to shut down our plants starting from mid-March for more than 2 months. So this has affected the market. The construction sites also were not operating. So our best estimate in terms of demand drop this year would be hovering between 10 to 13%, right? But the good news is that our economy is resilient. And we strongly believe that the future of the economy is not canceled. This is just postponed because the fundamentals are good. We will bounce back from this crisis. And our forecast is that no later than in 2021, the next year, the market should come back. The total demand for the cement market should come back to the level of 2019, which is already a very good performance. But again, I stress the point is that we really need the help of the people to continue to be patriotic and to buy local, because times are extremely difficult. And when you buy a bag of locally manufactured cement, you inject directly the equivalent of 150 pesos to the local economy. When you buy imported cement, this is less than 50 pesos. So, that is a very important matter for us.
Mm-hmm. So, in short, you are saying that you are expecting a V-shaped recovery come 2021, and a very interesting point here. Let me ask you, Nabil, how's the playing field here now when it comes to competing against imported cement? Since this is a point that you've been harping on, the DTI, of course, has recently hiked cement import duty yet again. That especially as they expect cement import to actually rise by 9% this year. Would you say there is a resurgence of cement imports, and how might that actually affect domestic players?
Yes, unfortunately, for the local industry, Jess, there is a very strong surge of imported cement. Why? Several reasons. The first one is simple. No, you have seen the exchange rate of the pesos. Pesos is extremely strong, and this is acting as an adrenaline boost for importers because they buy in US dollar with the strong pesos. The second one is that this has created an oversupply in Southeast Asia, the pandemic. So there is an ample supply for imported cement. So we are really supporting the different campaigns of DTI, especially the Buy Pinoy one, but also the one about making it happening in the Philippines. This is creating a real threat to the local industry. We were discussing before. I mean, some people are thinking that there is not enough installed production capacity in the Philippines to fulfill the local demand. This is wrong. Those are rumors spread by traders in order to scare the people. We have the installed facility in the Philippines, and we are ready to supply this market. There will be no cement shortage, but please help us in the recovery effort and buy locally manufactured construction products.
Okay, this time around, which sectors though are you banking on to help boost demand here for the cement industry? Are you still heavily relying on infrastructure, Or is there a good balance as well when it comes to housing projects?
We divide our markets into three main segments. The first one, capturing more or less 50% of the demand, is the residential segment. And there is a huge backlog. It's more than 5 million houses as a backlog. So this segment is somehow the backbone of the demand, and it's going to continue to grow between 5 to 7% a year because we need houses. Then the non-residential segment can be hospitals, schools, which is only 20% of the total market. This one, offices, this one will take a hit for sometimes. It's going to take time to recover on that one. But infra is capturing almost 30% of the total market in the Philippines. And we are also fully supporting the Build program. We strongly believe that this program will get traction at the very beginning of next year. So there, we may face a double-digit growth on this segment, and that's a very important things because we'll be happy to contribute to adding infrastructure to the country.
All right, last question here, Nabil. Will there be enough supply of cement, especially for rehabilitation projects in areas affected by the typhoons? How do you work around logistic concerns?
You're right. In the affected areas from typhoons, logistics is key because if the roads are flooded, but that it's a commitment that has been taken at industry level. We will really walk the extra mile. We'll do the utmost in order to bring the cement on site, even to the sites that have been the most affected by the cyclones, because this is our job and this is our duty.
All right. Thank you very much for your time this morning again. Great things ahead for the cement industry, at least based on your outlook here for a recovery come 2021. Again, Nabil Francis, President and CEO of Republic Cement. Thank you, sir.
Thank you. Thank you.
And those are the biggest business news this Tuesday morning, December 8, 2020. Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.